Hello everybody, Jim Malone here from Dallas Trading Floor. Just wanted to do a follow-up on a trade that I put out for everyone on ASML. This was a bull put spread that we put out on April 12th, and it was successful. We were able to collect all the money on this one, and I kind of want to show you the results of this to show you sort of how these trades work. Now, when we originally opened this trade, what we did was we sold the May 17th 890 put, and then we simultaneously bought, for protection, the 880 put, and we totaled out at $780. That was our credit. This was the credit we received for selling the higher put and then buying the lower put. This is sort of a map of sort of how the trade went. When we started out here, of course, remember, we sold the 890 put. So it kind of started out in the red there a little bit. But as the time went forward, and that's the key here, and the price went up, so you can see we kind of went in this direction. Now, we held it all the way to the end, and we retained the 780. That was the credit that we got when we sold the put and we bought the underlying. So that is the credit that we got. We sold it for the entire time. Now, if we had closed it early, we might have lost on this one, and this is really up to you, but this is sort of the graph of sort of how the trade progressed. This line here sort of shows you where it went, and this was essentially the 890 level. This is where the put is. So if we fall below this 890 price, of course, we would potentially get put the amount. Now, of course, we had protection at 880. So really, if this went down, we would only take the loss down to where we bought the 880 call. So really only a spread of 10 here. But as you'll notice, when we started out, we dipped a little bit, then we went up and it came way down, and then we kind of bounced around here, and then we started gaining as we got closer to the May 17th expiration. And when we hit the May 17th expiration, both of the put options expired, and of course we kept the credit that we received, which in this case was 780. If you'd like to find out more about trades like this, and by the way, joining Dallas Trading Floor is free. Just scan the QR code to the right, and you'll be taken right to a sign-up page on Beacons, and just sign up for Dallas Trading Floor. And we offer several free trades, and then also some options information that might be very profitable to you. So very easy to join Dallas Trading Floor. Just scan the QR code. It takes you right to the sign-up page. Sign up, and you'll be receiving our email letters, and it's free, by the way. And by the way, you can cancel anytime. So hope to see you again. This is Jim Malone for Dallas Trading Floor, signing off. Hello everybody, Jim Malone here from Dallas Trading Floor. Happy Friday to everybody. I have an interesting trade that I'm going to be doing tomorrow. Well, actually today, because it is Friday. This is a bull put spread on ASML, and if you know ASML is probably one of the most important companies in the world, as they make the lithography equipment that all the chips from NVIDIA and AMD and all of them are made from. So TSMC is the company that actually manufactures the chip, but they use machines from ASML to manufacture them. So this is, in a sense, one of the most important companies in the world. As of late, ASML has been forming a flat base, and it has pulled back, and it looks like it may move higher. On Monday, it actually moved to $1,000 a share. One of the reasons we like to use these spreads, these put spreads, is because of the high price of the stock. If you were to buy the underlying shares and then do a covered call, well, it would cost you $100,000 to do that. What we're going to do here is we're going to use puts, and we're not going to buy the whole range. We're only going to buy a certain range. So take a look here, and you'll be very interested. This is one of the ways that you can trade in a extremely high valued stock without risking as much as you would on a covered call. ASML has been on a tear since it moved past the $696.97 buy point. And it did reach an all-time high of $1,000 on Monday. Now, it's pulled back a little bit from that, and it may make a second attempt at the 1,000 mark. But the stock is extended from a cup with handle base, and it is pulling back to a very critical area. And I do believe that we will see it move higher. Now, earnings and sales are expected to decline in the following quarter, but I believe that because of the orders, we're going to see this stock hold up very, very well. As of yesterday, ASML reached $9.92. It was up $17.57, or about 1.8%. The volume was down a little bit. It was down about 9%, but still quite strong. In the after-hours action, it went down to $9.92.11. But remember, it did come up all the way up here, and it surpassed the $1,000 mark. Now, it's come back down, and as you can see, this red line here, this is the 50-day moving average. And what happened is it's been a flat base. The 50-day moving average has caught up with it. It looks like it's bouncing higher, and that's a very good thing. Also, you'll notice that the relative strength line has been moving in an upward direction. This is very bullish. This is very bullish for the stock. Now, of course, we're seeing some resistance at 1,000, but it did move past 1,000 just on Monday. Now, another thing that we want to look at the stock is to see how the volume is trading. Well, it looks like mostly blue bars here. There's a few red bars in here, but the vast majority of this, and this is on the weekly chart, are blue bars, and that means rising interest from institutions. You'll notice that fewer and fewer people are willing to sell, and the volume is pulling back. This is a potential breakout that might happen. As you can see, there's a kind of a cup, and then there's another cup with handle. What I've done here is I've drawn a line here. This is where I believe the support is. That was the buy point that we talked about earlier, the 692 buy point. That's right here. So this is where support is. So when we're doing the spread, you'll notice that I have another line up here, and this is just slightly lower than 900. This is where I think the second level of support is. And as you can see, the composite rating of ASML, 99, EPS, 99. It's a very profitable company. Relative strength, 93, very, very strong. It's the top 7% of all stocks. The group relative strength, A+. The SMR, this is a kind of a proprietary IBD rating, A, and the accumulation distribution, a B-. So it does believe, there are companies in it. It is being accumulated. It's not at the very top, but it's quite good. Also, you'll notice in the semiconductor equipment group, it's number 2. By the way, it's far bigger than just about every one of these companies, with the exception of maybe Applied Materials. So this is one of the very largest companies, and therefore is potentially very, very well widely held. Another thing you'll notice is that the composite rating is 99. That is the very best composite rating. And if you're interested in what they do, they're a Dutch manufacturer of lithography systems that are used in the fabrication of integrated circuits. And by the way, the most advanced circuits in the world use their system. So they almost have a monopoly on this kind of this kind of equipment. Now, before we go any further, please remember that options trades are risky, and investors can lose 100% of their investment. Now, what we try to do here at Dallas Trading Floor is limit the risk, so I'm going to show you that in a second. But this article is for educational purposes only and is not a trade recommendation. Remember, always do your own due diligence and consult your financial advisor before making any investment decisions. Now, on to the trade. Purchasing a put with a lower strike price and then writing a put provides a bullish strategy for the trade later today. Sell the May 17th 890 put, 4 contracts at $12 and 10 cents for 48.40. Buy the May 17th 880 put for contracts at $10.15 for 40.60, and the net will be $7.80. This is the credit that you'll get at the beginning of when you begin the trade. Maximum risk that we could endure is 32.20, and this is the different return that we can get on this is 24.2%, or about 246% per annum. That is represented in the 780 credit that we get. The break even, of course, 888.05, and the probability of profit, very high, 81.2%. Let's say, for instance, as the time goes by, the stock, instead of going up, it falls. Let's say it goes from where it is now at 992, and it falls way down here to 960. Well, you can see we're in the red here, and we decide that, well, it may fall more. Here's what we do. We close the trade early. And the way we close the trade early is we reverse this spread. We, instead of selling the May 890, we're buying it back. We buy it back, and an estimate of 13.02 per share per contract. That would be an out of pocket 52.08. But remember, we're also selling the May 880 call, and that at we estimate about $10.69. So we would get $42.76 for that. And if you net them together, well, the closing trade would cost us $932. But remember, we collected a premium $780. So our net out of cost, if this trade goes against us and we close it early at this date, $152. So this gives us some protection. You'll notice that if we're basically good until we get down to about 885. Anything below that, we're going to have the maximum loss here. Okay, so the maximum loss comes in right here at if ASML falls 11.2%. So we need to watch, of course, the price of ASML, and if we need to, we can close it early for a loss, or we could possibly move it out. But that's a video for another day. But if the stock stays even and just slightly goes up, well, by the time we get into May, you can see we can close the stock for very, very little cost. And if we are able to hold it all the way to the expiry on May 17th, you see we keep all the money. So this is sort of how it works. By the way, I've put the address of this calculation for my trade here. All you have to do is copy this and then put it in your browser, and you'll be taken directly to. Bull put spreads can be intimidating at first, but it's a great way to leverage your account. Thanks for watching.